Action. So thank you so much, Jim. This is Jim Boyer with Great Pacific Funding. And he and I work together in the same, actually the same building, in the same office. So we got to know each other a little bit better. And go ahead and tell us a little bit about yourself, Jim, before we get into the topic we're going to talk about.
Okay, well, Chantal, I started out in the business in the mid 80s. And so I've seen a lot of stuff take place. And this is interesting times. Basically, we've been in a position now where no one really kind of knows what's going on. And I think everybody's a little frightened. And they're frightened for their health, they're frightened for the family, and it's rough for everyone right now. And so hopefully we can talk a little bit today about what's going on in my business, which is the mortgage business, and at least take away a little bit of the confusion that people are having about stuff, because people just don't need to be any more confused than they already are.
Oh, absolutely. I mean, I think that's the number one thing. Everyone is everyone is scared and uneasy. And, I won't lie, I've been implicated myself. Most of my business has either been put on a hold or a halt, or a lot of buyers have just postponed purchasing right now. I mean, because a lot of them, their jobs are on the line. They don't know what's going to happen. They don't even know if they have a job next month.
Yeah.
Even though, and that's kind of one of the things, even though the mortgage payments, most banks right now are allowing a delayed or deferred payment for, 3 months, 6 months, whatever. But this obviously has a lot of implications. So that's my main question is, now that most mortgage payments for most people have been delayed, what are the real implications of this in the near and long-term future? Because obviously there are other costs down the line that we're not even thinking of, and that can have a trickle effect.
Okay. Well, the first thing I would say to anybody who's considering skipping payments, they're calling it forbearance. And what that term really means is we'll let you not make a payment, but you're going to pay it back at some point. So I talked to a couple of people who just thought that they could absolutely just never pay that payment back. And that's really not the case. I think what everybody who's considering doing this absolutely should do, is contact their lender, because it's not a one-size-fits-all proposition out there. Each lender is going to come up with their own way of dealing with this. So if you hear of some company that did something one way, your mortgage company may not do it the same way. So I can't give you one simple answer to that, because each individual lender is setting up their own individual forbearance programs. So,
I understand. Now, in the example of, for example, with the Great Pacific Funding, what are you guys doing to really how are you taking care and charge of this situation?
Well, we sell all the loans that we make, so we don't service any loans. So what we will do going forward, I know that there's a couple of lenders on loans that we will be making in the next month, or closing in the next month, who are now telling us, be prepared to get a letter signed by the people who are going to close on their loan, that they will not take forbearance during the first so many months of their loan. They haven't given us the details of that yet, but that's the thing that's going to be coming in the future. It's like, they're saying you can't make a loan and then not pay it right away. So that's
Right.
one. So,
and another thing too that you were talking about right before we got on this call was about the service. That, can you go in a little bit more about that? Like,
sure. So lenders, the lenders that are making loans, that make loans and service them, in other words, whoever you make your payment to,
right.
if they let you skip a payment, right now they have to still pay the investor who holds that loan. So let's say you have your loan with Chase as an example. Chase doesn't keep all the loans that they make on their books. They package them and sell them, and they retain the servicing. So you still make your payment to Chase, but they have to pay the investor who bought that
Right.
loan. And what happens is the taxes that are due, the insurance payments that are due, all of those things the bank is still going to have to make those payments. You
Right.
know?
Because like we
So,
said, the property taxes at the end of this week are still due April 10th. Just
right.
because you're not making a mortgage payment, you're still paying your property taxes.
Yeah, and if the lender, if you're making your property tax payments through the lender, in other words, they're collecting it
Sure.
every month for you, they still have to pay that money that's due, even if you skip a couple of payments.
Right.
So yeah, I mean that's a cost to them, and I don't want to get too detailed with this, but there are ramifications of you not making the payment to them. They still have to pay the interest to the investor. They also have an agreement that they will make the payments all the time, and at a certain point, they literally could run out of money to make these payments, and that's one of the reasons that the government stepped in what they called the liquidity, to work on liquidity for banks right now.
Right. Right.
So the whole thing with liquidity is that they wanted to make sure that the banks, if they needed to, could go to the Fed and borrow money to pay the investors. Because if all that doesn't happen, then the mortgage market could collapse, and that's why they're doing that.
Well, and that's something that we're all afraid of. We are afraid of, even though homeowners are thinking, yay, I don't have to make a mortgage payment for a couple months. Um, I think a lot of us don't understand, like I said, the long-term implications where this could be the beginning of the collapse of the mortgage industry.
Yeah, and that's what, again, that's why I said that they made the liquidity available. The Fed
Sure.
said we'll open these lines of credit for you so that you can continue making those payments. Um, One of the things that's happening is there's different types of mortgage companies. There's banks that lend money and sell the loans on the secondary market. Then there's non-bank mortgage lenders. Um, and those are the people that have not necessarily gotten the access because they're not FDIC insured, they're not federally chartered. They're just big mortgage companies that make loans and sell them to Fannie and Freddie. So what happens with those folks is they don't have the access right now to the credit line that the banks do.
Ah,
I think that what's going to happen is that might have been like an oversight in the law, because they kind of jammed this thing together pretty quickly.
right.
So I'm thinking that probably there's going to be some sort of facility that opens up to them, because they have the same problems the banks have. What else on that? I think that the long-term ramifications is the potential for some of these people to go out of business. I don't think that's going to happen. I think the government will step in and open the line. In the near term, I think one thing that's going to happen is the people who are those types of non-bank lenders are going to come into the market and go out of the market. I think what's going to happen is they're going to say, okay, we can make some more loans, but we don't have much credit left on our credit line, so we're not going to make a lot. So they're going to back off a little bit. I've been seeing that in pricing for the last month.
Interesting.
Yeah. So what they're doing is, I had one day where somebody was at 3.5%. One of our investors was at 3.5%, and there was another investor who was at 5% on 30-year fixed rate mortgages.
Wow.
They just did not want people to try to send them loans. They couldn't handle it.
Sure. Yeah, I heard about a lot of that. And I know that right before the last couple of weeks, I had a couple of situations with buyers and their lenders where a month ago they were fine, but then they had all these refi and all these other, a lot of the lenders were overburdened. But, you know, thank you so much. I want to make this short and sweet because I know that, money talks can sometimes be long for people, but I really appreciate it because I know that we're in unprecedented times. Everyone keeps saying that. I don't want to be redundant and I don't want to be fatalistic. I'm naturally an optimistic at heart. So I really want to see that things will, I know that things will go better. It might be a different new norm. We probably won't be going back to pre-COVID-19 anytime soon. Even with social distancing probably being eased in the next 2-3 months. This has obviously long-term impacts on our social skills and on money. But I really appreciate just you giving this information, and hopefully we'll do this more often, because I think as information changes, it's really important to share the message with our consumers and with our clients, and with our colleagues, because we need to know this information and for others to be able to make educated decisions.
Well, thank you. I appreciate the opportunity to talk to you today. I'd love to come back. I mean, I've got pages of stuff that I could talk to you about.
Well, let's break
No,
it
I mean,
down every week, and then we'll start talking more and more. But yeah, absolutely. Like I said, I feel that some of the information I gave last week might not even be pertinent this week. So that's why I want to keep abreast of everything's going on. And, again, it's a really good thing that we're able to, a lot of banks are deferring payments, but I just want them to know that it's not free money. And like you said, the main message is you still have to pay your taxes, and you're going to have to pay that money back. It's a deferred payment. It's not a free payment. You still have to pay that money back at some point.
yeah, yeah. And I know when people call their lender, it could end up being, you could be on hold forever.
Oh, I
You're just,
bet.
you're just gonna have to, I mean, I know these people are completely buried right now.
Right.
I, I heard of a guy that was on hold for 3 hours the other day.
Oh my God.
And don't, I would say to everyone, um, the people you're going to be talking with on the other line, on the end of the line, they've just never done this before. And it just got started, and they're not going to really have great answers for you. I mean, they're just not.
Right.
So be patient with them.
They're trying to figure it out too.
They're trying to figure it out too. They're like every one of us. We're all trying to figure it out.
Well, again, thank you so much, Jim, and hopefully we'll see you here more often. And I really appreciate you taking the time again. I'm glad. Stay safe, stay healthy, stay home, everyone, and we will continue this another time.
Okay, thank you.
Thanks, Jim. Bye.
Bye.